So I had a question from one of my members. Do you want to answer this? I need to make sure that I do my taxes right. That I messed up on last year was paying a penalty because I didn't add more taxes to my spouse's income. How do I go about doing that? So I don't know your entire tax situation, but here's some things that I really, really want you to pay attention to, especially guys who, you ever heard that term dinks? It's called dual income, no kids. I'm not a dink because I have a kid, but it means dual income, no kids, spouses who are making multiple income sources. And this is the most common issue that I have seen so far. So I want you to take a look at this, okay? So this is the marginal tax rate for 2025. I have been penalized by the IRS before that was actually the first year my wife and I got married. That was my fault. I should have known better. I think I was just so busy. It was so long ago, but I didn't realize how much tax that we did not with our employers. One thing you have to remember as married and filing your taxes jointly, and let's say husband or spouse one has a job, W-2 job, and then spouse two has a W-2 job. You have to remember that both spouses' employers, they do not talk to each other. So when you put it on the IRS form that you are married filing taxes jointly, even if you put the bracket that says my spouse is working, they don't know. That job number one doesn't know how much money job number two is making, okay? So even if you're not married, if you're single and you have two jobs and making pretty good income, this is something that you want to pay attention to, okay? So because this tax bracket is assuming that you have one job, and most of you guys have a W-2 job. So a W-2 job will calculate your income. So if you have your first $23,200 will be taxed at 10%. And then the next, the tax bracket will be 12%, 22%. So what you want to do and look at your spouse's income, and you can do however you want. I typically do the spouse with the less income. So if spouse one is making $100,000 a year and spouse two is making $70,000 a year, I would just leave the $100,000 income alone, leave it the way it is, and go to spouse number two with a $70,000 income and start with here at $94,300. Well, I'm at the 22%. Because job number two is assuming that your tax rate is starting at 10%, 12%, and 22%. But in reality, it should be from 22%, 24%, okay? Let me draw this real quick, okay? So let's go with spouse number one, income, 100K, okay? So that is spouse number one, cool. Now I'm gonna put another spouse number two, income, that's 69K. And spouse number one, income, $100,000 a year. So you're being taxed at 10%, 12%, 22%, okay? So that is the marginal tax rate that I just showed you right here down on the right side where it says married filing taxes jointly. So 23,200 and then 23,000 and then 94,000, right? So let me make sure that this is 2024. So let me go to 2025. So 2025 is going to be 23,800, okay? And then from here, you want to do 96,950 minus 23,850, okay? Calculates for you. So 73,100. And then for the remaining 100,000, here's my calculator. And this is all assuming that after the standard deduction. So 23,850, 73,100, 96,950 minus 100,000. So that would be 3,000. I should have just did the math here. So minus 73,100 minus 23,800. And that gives you $3,050 remaining. And then what you want to do here is multiply by 22%. And that gives you $671. Okay. Does that make sense? I'm going to go ahead and move this so it's not too confusing. So I'm really going to nerd out here because I don't want you to get penalized by the IRS again. So income here times 10% equals $2,385, right? And then if you do multiply by 12% here, $8,772. So this is what you should be taxed at right here. So the spouse number one with $100,000, and then by the end of it, this is how your tax bracket should look like. So your marginal tax rate is going to be 22%. right? So right here, because your remaining $3,050 is going to be taxed at 22%. So what do you think is better? Investing $500 a month, making 10% return, or investing $1,000 a month, making a 7% return on investment? You can't figure out how much you can invest without a budget. There's no way around it. I personally tested out the budgeting app called YNAB, and it's not just an app that can track your income and expenses, but it can even help you create a plan to pay down your student loans, car loans, personal loans, or credit cards a lot faster. So if you're ready to change your life by getting out of the paycheck to paycheck cycle, you can get a free trial without any credit card information by using the link in the description below. Now, when your spouse makes $70,000 a year, and that's also assuming that this is after the standard deduction, okay? So your first $70,000, actually the entire $70,000, should be taxed at 22%, not starting at 10%, not starting at 12%. It should be starting at 22%, okay? Because if you look at the 22% marginal tax rate, you have between $96,951 and $206,700. So let's do the math here. So the 22% tax bracket is $206,700 minus $96,950, okay? So when your income is $100,000 from the spouse one, and then the second spouse is $70,000, you have to combine those and then calculate it from $70,000 multiplied by 22%, and it's gonna give you $109,000 is the threshold. Does that make sense right there? Okay, so I'm gonna slow it down just a little bit and let me know if I'm going too fast. So this is the key here. So you have the threshold of $109,000. However, your spouse, and I do this for my private client, so you can sign up by going to firestarshare.com/pricing if you want to sign up for a private client, okay? You can schedule a consultation with me at firestarshare.com/consultation. Okay, so if I do this, so spouse one made $3,050 plus $70,000 from spouse two, that gives you $73,050. So you have $109,000 minus $70,050. So you have $36,700 remaining for the 22%. So when you hit $206,000, that's when you move up to the 24% marginal tax rate if you're a couple filing your taxes jointly. So you have so many more tax breaks as a married couple, so just pay attention to that. And once you hit $394,000, then you're in the 32%. But just keep that in mind, is you need to combine your income and then you need to calculate how much you're missing. So if your spouse's employer is not withholding enough, you need to find the difference between how much is supposed to be withheld here, okay? So 70,000 multiplied by 22%, it should be 15,400. So 15,400, you want to minus whatever the tax your spouse's employer has withheld, then that is the difference right there, okay? Then you need to kind of do divided by 26 if you're getting paid bi-weekly, and just add the difference to it. So that's really the biggest thing, is you need to find what the tax, how much you need to actually pay and how much is being withheld. And you need to talk to your employer or fill out another W-4 to add additional tax withholding. Because if you don't do that by the end of the year, and when you file your taxes with your CPA or TurboTax or whoever, you're going to be penalized based on the interest rates from that quarter, usually from Q3 in 2024, okay? So you still have until January 15th to make your tax payment if you think you're under withheld. You can do that with your CPA. You can do it by yourself. It's really, really easy to do. But just check it out if you have spouse one, spouse two income, or if you have multiple sources of income as a single individual. You need to know what the difference is. If you don't know how to do this, get with me, schedule a session with me, or just talk to your CPA locally. And that's probably better than talking to me, if I'm being completely honest, because you might be living in another state and I'm in Nevada, so I can't really help you with your state income tax. You're gonna have to just talk to someone locally if that's the case. But really good question, man. Appreciate you.